All right, gentlemen, let's get her going here. Start me off at $25 bill, 25 to go 50, 50 to go 75.
What is a fair rate for seller financing? Welcome back. Using seller financing has many benefits for tax auction buyers. Now, the benefits usually go to the sellers. Now, there's a lot of sellers don't realize that they could sell, and when they sell, they could carry the mortgage. Instead of people going out and getting a mortgage, they could do seller financing. So that's what we're really going to talk about today. We're going to talk about seller financing. Now, I don't know where you are when you're watching this video, but I can tell you this. It's important to understand financing, and it's going to be one of the keys to success of being in this business, because if you can help people finance, you're going to be able to sell very quickly. Now, the government controls most of the interest rates in the United States, okay? Now, those rates go up and they go down, and the federal system changes those rates depending upon what the administrations are doing. So we don't get to control that, but I can tell you right now, interest rates control the real estate business. So many people don't understand it, so this is something you really want to spend some time on. So it sounds a little complicated, but I'm going to try to make it as easy as possible. I'm Ted Thomas. I've been involved in the tax lien and tax defaulted property business for over 30 years. And one of the things I've noticed is that people that learn how to do financing are able to sell and make more money than other people that don't understand that. So traditional real estate is normally thought of as being houses, vacant residential buildable lots, small apartment properties, small farms, small office buildings. That's traditional real estate. Well, the traditional real estate is there, and it's always been there, and it's a tremendous business. I'm in a little subset of that called tax defaulted. It's all the same thing. It's homes, it's residential lots, it's small apartments, and so on. But these are properties that people have not paid their taxes. All right, so when you don't pay your taxes, the local government takes action. What's the action they take? They're going to confiscate the property, and they're going to resell it just to get the back taxes paid. I'll be right back with some more details. So let's get started. So we're going to talk about real estate, and when you talk about real estate, if there's no way people can get financing, the real estate is just going to go down. Why is it going to go down? Because people don't have cash. So when you go into a recession and people don't have money, well, they're not going to buy real estate. Or it could be the other way around. If there's no money to buy real estate, there's going to be a recession. All right, so the majority of people that want to buy real estate need to have some kind of extended payment program. All right, for many years, the United States had a long history of one-year loans until the 1920s, as a matter of fact. And then in the 1920s, the Congress changed all the laws and said, look, we're going to make 30-year mortgages. As soon as they did that, real estate became an asset category that everybody wanted to be involved in, because you could finance that real estate over a period of time. So people didn't have the $100,000 to pay, but they were willing to pay much more than $100,000 if they could just pay it a little bit at a time. So that's where the 30-year loan came from. So if there's no loans, well, there's not going to be any real estate business. So it's very important. So if you understand that, you can take advantage of it in an honorable and ethical way, because owner financing is very important, because number one, it makes the deal happen, but number two, you're going to be able to sell a lot quicker if you can provide owner financing, all right? So it simply means that the seller is going to be the bank. Well, what's wrong with being the bank? Banks make money, you can make money. Some people just want to sell and have the cash. Well, you're going to reinvest the cash anyway, so maybe what you want to do is you want to become a seller financer, and what you can do is make money on the money that you've already made. All right, so senior citizens find this is a good way to sell their property when they start downsizing. So they sell the property, and then they become the bank, and then they get money in every single month as passive income, because they're collecting interest on the loan that they made to the person they sold the house. So experienced real estate people understand that there's mortgages used in the eastern part of the United States, and then in the west they use what they call a deed of trust. Actually, they use that also in the south. A deed of trust is very much like a mortgage. It's not a mortgage, but it's the same thing. It's a lending instrument. But in the middle part of the country, it's very common for them to use what they call a contract for sale, or a land contract, or a contract for deed. All right, so the middle part of the country does that all the time. So why don't we just do the same thing? All a contract for deed is, it's an installment sale. Now, where would you get an installment sale? Well, if you went down to Home Depot and spent money, of course, they'd say, look, you want all that new flooring for $10,000? We'll finance you. You can just have an installment sale. You could pay for it monthly. You could do the same thing if you went and bought a new TV or you bought a new refrigerator or whatever. That's an installment sale. So we're going to be in the installment sale business, and we're going to sell properties that way. If we can sell the property that way, what we're doing is we're giving a new buyer a chance to get started, and we're creating another income for ourselves. So a lot of times when people want to buy real estate, what they have to do is they have to have 20 or 25% down payment, and then they have to go to a bank to get the money. But what if we could say, all right, you can have less down payment with us, and we'll let you finance it over a different period of time. So you're getting the idea. So contracts of sale are nothing more than an installment contract. So installment contracts are where people are concerned about interest rates. You see those little white circles? That's how many auctions are taking place within that state in the next 90 days. This calendar updates every single day. I'm here today to show you how to make money. To do that, I'm going to show you briefly that there are thousands of tax defaulted real estate properties across the 3,000 plus counties in the United States. This is quite interesting. You're looking at the Ted Thomas Magic Interactive Map and Auction Calendar. It changes every day. Now, I created the calendar and the map so I would know how many auctions are taking place every day in the United States. Now I can show the little guy how to make money. Most importantly, I created this system so I could have an auction list for each auction 24/7. So my students are buying a tax defaulted auction. They're not buying pristine properties. Some of these properties are going to take and need some rehabilitations. All right, now what are you going to do with these properties? They're sold at back taxes. You want to get them out into the marketplace. Biggest profit is always going to be made if you buy low and sell low, in my opinion. Now, other people are going to buy low and then they're going to have to hold on to those properties. I don't want to hold on to them. I want to make this thing happen as quickly as I can. So I have students, and I'm going to show you examples of them right now. You see, I try to include these interesting examples because you'll see that some of these people make a lifetime of checks because they do the right thing. For example, in a local county just north of Tampa, Florida, small population county, one of my student investors bought a property for $9,100. Now, that's not very much money. Now, the property was used and abused. It was covered with trees. It was overgrown. It wasn't in very good shape. All right. So the property tax assessor, what did they do? Well, they put a value on the property. They said the assessed value of the property was $91,000. He bought it for $9,100. It was $91,000. So you had a great amount of margin right away. So what the student did before they bought is they went and looked at the condition of the property, and then they went out and using the techniques they learned in the class, they went out and determined that the value was considerably higher. So they checked with comparables, they checked with other properties in the area, found out the property was worth $150,000 according to other comparables. All right, so now they bought it for $9,100, and now they had a value of $150,000. All right, so they could easily do a buy it low and sell low. However, the people that were in the property, well, they were handy with it. They knew how to do the work and take care of it. So they made a deal on the property, and they actually sold the property to the handyman tenant. He paid $5,000 down and agreed to do the repairs that needed to be done. So the property value was going to not only increase with all those repairs, the actual cash value of it was one number, but it was going to go up quite a bit by doing some fix-up. All right, but here's the beauty of the whole thing. They bought the property for $9,100, they got $5,000 down, and then they sold it on an installment contract, which was an option to buy, which is nothing more, in that case, nothing more than a rental agreement. So now they were getting payments for the next 10 years on that property. So how many deals like that would you like to make where you bought it for $9,100 and you sold it for $150,000? Yes, the payments were over a period of time. All right, so auction buyers really can make some money. So you ask yourself, if you could buy some of these properties for 10 and 20 cents on the dollar, where would you be? well, you'd be in a different place than you are now. Now, you want to be able to sell these properties. All right, this is the thing that holds people up, is selling the property. How do you go about selling it? Well, you need to use media to get it sold. All right, what's the media you're going to use? First of all, signs on the property. Then you're going to use a multiple listing service. You're going to use Craigslist. You're going to use Zillow. You're going to use every possible electronic site that you can find. All right, now there's a whole group of people that want to buy these properties. There's property flippers, there's people that are handymen, there's renovators who want these properties. All right, so if you can buy them low and then sell them low, you're doing great. Well, another whole market that people pass up is the people that don't have good credit. Now, who doesn't have good credit? A lot of people have been through a bankruptcy or a divorce or some crisis in their life, and what's happened? They've lost their credit rating. So that means they have a poor FICO score. Now, a poor FICO score simply means one thing: you are going to be rejected by the bank. Now, it wasn't the bank's fault that you got divorced, and maybe it wasn't your fault, but you're going to end up with a bad credit rating. And if you haven't paid your credit cards on time, you haven't paid your mortgage on time, so what are you going to do? You're not going to be able to finance things. Now, you might have a great job. So a lot of people have good jobs. However, even though they've been on the job 10 or 15 years, they can't get financing from a regular bank. Well, we can advertise installment sales, financing available, and these people will flock to us. Now, why will they flock to you? Because, number one, they can get it financed. Everybody wants to own a piece of the rock, and in many cases, they can bargain with you, not so much on the price, but the property might need some repair, and they're willing to do those kind of things. All right, so these buyers, it doesn't mean they're not going to make their payments, but you can protect yourself. Just sell it on an installment sale. It's a contract of sale. You don't have to give them a deed. Now, if you don't give them a deed, guess what? Then they're in a rental agreement. If they don't make their payments, you can evict them and push them out. All right. Now, the biggest problem people have with properties is they don't understand marketing. It's the biggest blunder that they make. They don't take the time to think about the marketing. So I've told you a couple of times now on this video, you've got to take the time to buy media, let people know your property's for sale, get signs out there, and guess what? If you do that, you're going to get a lot of people attracted to you. You always need to sell installment sale if you expect to get those 25% of the market that's always being turned down by the bank. So seller financing is definitely the key to the vault. So you want to keep that in the back of your mind. So if you buy low, sell low, that's going to work. All right, in this case, if you're going to use installment sales, you probably won't have to discount as much. Don't get me wrong now. I'm not saying this is going to be a piece of cake like falling out of bed or falling out of a rocking chair. You're still going to have to work for it. But I can assure you, this is not only an exciting business, but it's very, very profitable. All right, so the commitment of time is what people forget about. This is going to take some time. Now, every business that you get into, the amount of time you put in determines about how successful you're going to be. So I'm about to finish up now, so I want to remind you of a couple of things. Number one, don't buy a property that you haven't looked at. I don't know whether they had a hurricane, there might have been a windstorm, there could have been a flood, and who knows, you might have bought a property right next to a pig farm or a chicken farm. Those are going to be hard to sell. So you've got to look at the property. Next thing, don't buy a property, don't give the treasurer the money unless you have decided what you're going to be able to sell it for. So I use examples, and I always use examples of people that go out and look. When they go out and look, they know what they're going to be able to sell it for. So don't buy a property you haven't looked at. Now, I mentioned earlier, auction list. If you'd like a sample of the auction list, it's right below me. Don't forget, request your free auction list right below me.